Hey everyone, welcome back to the channel. Today we're going to talk about silver. We'll jump into the recent price action and maybe do a little reckless speculation about where silver goes next. Then we'll wrap up with some rules and behaviors that keep me in the silver stacking game. As always, none of this is financial advice, because I'm not a financial advisor. I am a pair of hands on YouTube sharing my approach to holding precious metals like gold and silver as savings in a well-diversified portfolio. Lastly, if you enjoy the content, don't forget to hit the like and subscribe buttons. Now to the charts and shiny stuff. The last time we discussed silver, we were talking about the wedge that prices have been in for several years. Now, if I had $1 for every time someone on YouTube said that this is the time silver breaks out and heads for a 30 handle, I'd have long since turned that money into gold. However, looking at the start to April, I'm a bit optimistic that silver might finally be following gold higher. However, it's good to remember that there is a lot more April to go before anyone can say with a high degree of confidence which way we're headed. Truth be told, I'd like to see silver finish the month strong and then come back and touch that long-term resistance line once or twice to establish it as support. So that's my take for the next 1 to 3 months. However, if silver is indeed getting off the couch here, we might not wait around to establish support. If that happens, I'd be worried about how sustainable a rally we'd get. It's best if silver followed gold over the last few months and really established a base before moving higher. While I wish we had a bit more clarity, I'm going to channel my inner Burgess Meredith and remind myself that silver stackers can wish in one hand and shit in the other and see which one will be full first. So at the risk of getting all bulled up over today's price action, I thought it might be good to reground myself in my stacking fundamentals. The more I want to pull the trigger on a tube of eagles or maples because of the price action, the more I need to revisit my silver stacking rules and behaviors. Silver stacking rule number 1. Never, ever, ever go all in on silver. Silver stacking rule number 2. Never, ever, ever forget rule number 1. The long-term behavior is to dollar cost average silver. Dollar cost averaging is often considered one of the better strategies for purchasing physical silver, especially for individuals looking to save without trying to time the market. This approach involves regularly buying a fixed dollar amount of silver, regardless of its price, leading to buying more when prices are low and less when prices are high. Firstly, dollar cost averaging mitigates the risk of market timing. Attempting to predict the optimal moments to buy can lead to significant losses, especially in volatile markets like silver and double, especially when charts start to look really good. Instead, by consistently investing over time, one reduces the impact of short-term price fluctuations, potentially lowering the average purchase cost per ounce of silver in the long run. Dollar cost averaging increases your chances of living to stack another day. Secondly, dollar cost averaging promotes disciplined investing. By setting a regular purchase schedule, stackers can avoid emotional decision-making influenced by market highs and lows. This discipline helps maintain a steady course of savings, which can be particularly beneficial during periods of market uncertainty or volatility. The more silver looks like it's about to break out, the more I remind myself that I've been stacking regularly. My bags are full, or at least as full as they're going to get if prices kick off in the next few weeks. You're never going to catch every wave. Dollar cost averaging ensures you're around to catch the next one. Notice a theme here? None of us are market timers, especially in a market like silver. For silver stackers aiming to remain in the market long term, exhibiting certain behaviors can significantly enhance your chances of success and stability. 3 of the best behaviors are: staying consistent can help silver stackers navigate through market fluctuations without making impulsive decisions. By doing so, stackers can avoid the pitfalls of trying to time the market and may reduce their average cost per ounce over time. This steady approach can lead to accumulating a substantial amount of silver gradually, helping to build wealth and mitigate the impact of short-term price volatility. Thorough research and education, continuously educating oneself about the silver market, economic indicators, and factors influencing silver prices is crucial. A well-informed stacker can make more knowledgeable decisions and better understand market trends and cycles. Staying updated with industry news, attending seminars, joining forums, and reading analyses from trusted sources can provide insights that aid in making informed decisions about when to buy, hold, or sell, especially when you're afraid you're going to miss out. Risk management. Effective risk management involves diversifying one's precious metals portfolio to include not just silver, but also other assets like stocks, bonds, and perhaps other precious metals like gold. Diversification helps spread risk and can cushion the impact of a downturn in the silver market. Think of it this way. If you are stressed and losing sleep over your silver stack, you probably have too much silver. By adhering to these behaviors, disciplined investing, continuous learning, and strategic risk management, silver stackers can enhance their ability to stay in the market for the long haul, navigating through its ups and downs with a well-rounded and informed approach. Thanks for attending my TED Talk, and I'll catch you next time. Cheers.